you grappling with this market? And of course, you know, the big chunk of the damage by IT. But I mean, yesterday, to be fair, there was the likes of some of the private banking names, L&T, Bharti, Eternal, all of it was out.
I think generally overall, you know, given that post Trump's new 15%, I think it's a net positive, as in net incrementally status quo, that is whether it's 15 or 18%, doesn't move the needle much, but at least, you know, it kind of, you know, gives you clarity that the upper end is probably around 18%. India can live with those numbers, but companies are unlikely to do any capex of any meaningful amounts until about there is clarity on the US Supreme Court ruling, which means another 5 months, 6 months goes by. So meanwhile, I think incrementally, because it's been sold off quite well, there is reasonable valuation comfort. So we find sufficient pockets in cyclical bits where we can buy.
Chakri, how do you look at some of the other sectors, you know, like a capital goods or defense at this point in time?
You know, capital goods and defense, both of them are, you know, long dated plays. Defense is even more longer dated. Their order books are phenomenally strong, as we all know, which means that gives you the revenue clarity. Valuations are okay, they're not expensive. And you'll get these incremental contracts like you had a few days ago between India and France. And those kind of things will kind of support the sector. So they're all good long-term buys, nothing immediately thing. As far as capital goods is concerned, I think now the latest US Supreme Court ruling will kind of some breaks, because companies will still wait and watch, whether it's textile companies, other exporters, they won't do any kind of capex. They'll wait and watch. That means another 6 months goes by. So there you have to be slightly more selective. Maybe the EPC companies and domestic construction companies, maybe yes.
Interesting. You know, Chakri, within the railways theme, you know, RVNL continues to win orders. There's another fresh order win that RVNL has clocked. How should one play that theme as a whole? Are there any, within the railways basket, is there any single sector stock which looks attractive, at least at this point, to try and play that theme?
You know, that sector has actually suffered from over expectations. It's actually growing very well. You take whether it's Titagar or Jupiter, all these companies' order books are very strong, revenue execution is good, you know, EPS profile balance sheets are clean. And, you know, these companies will grow much at a much faster pace in the next, let's say, 2 to 3 years. But immediate triggers are not there. So again, this is not given that the valuations are kind of fallen, I think it's worth buying into over time.
Right. Okay, just want to discuss some of the other liquid movers from yesterday. Of course, there were the likes of TechM, KPIT, LTIM, Coforge and Persistent, all from the IT pack, which were weighing heavy on the indexes yesterday. But other than that, there was an Eternal as well, a very sharp crack there, and L&T as well, which fell about 3.25%. Kunal, what's your reading on the charts of an Eternal and L&T? Because for Eternal, it's been quite a sharp correction like we were discussing last afternoon as well. Now it's around what, 250 thereabouts?
Yeah, and I think the last time also the stock had taken support at 250 levels. So I think the last two attempts prior to this, the stock had taken a good bounce back from 250 levels to come back towards 300 mark. So we can expect that maybe this time around it could be very similar in terms of risk reward. The only positive part about Eternal on the charts also is not just the price support, but the indicators on the daily charts have also entered into the oversold territory for the stock. So that could probably be maybe a soothing factor, that maybe the pace of correction could halt, and around this 250 levels is where you might see demand originating, some short covering rally which could creep into the stock price. That could probably aid the rally or the bounce back for the stock price. But it would still be a bounce back of sorts only for Eternal that I think one should be playing for.
Chakri, what explains this constant pressure on Eternal?
You know, a number of things. I think some of them are overblown things, like, you know, continuously whether there can be margin improvement ever at all. Whether it's Eternal or Swiggy, you know, they're still number one, number two players. Margins will take quite some time. They're expanding into any number of lines of businesses. And I think that is the main thing, because, you know, whether it's the profitability will keep up with the valuation is the concern.
Okay, interesting. All right. You know, Chakri, I also wonder what you make of this IRFC OFS, because there's going to be a 4% divestment by the government. The stock obviously has done very well for itself, very stable set of numbers. As a lender, again, within that railway space, do you believe that could be an interesting play? Of course, you might see a bit of a correction in coming days because of this OFS. But would it start to look interesting at all, or would you stay away?
No, I think you summed it up very well. The next few days, clearly. After that, definitely yes. Because again, railway is very important both strategically as well as economically for the country. And that's an area also, luckily, the government has its focus on. And as a financing vehicle, it remains, because railways is a difficult areas for banks to finance, or NBFCs or any other lender to finance. So they do incremental bits of it. I think the main bit of financing will come from IRFC. So there's growth. So answer is yes.
If you look at this week, a couple of sectors that have been standing out is PSU banks, energy, oil and gas, and maybe even FMCG and pharma. How do you look at these sectors? These are now becoming, safe havens for some of the investors as well.
Yeah. So in the case of banks, clearly, the momentum clearly remains with the PSU banks. The credit growth is stronger. All the the government capex will go to the PSU banks. The balance sheets are clean. All the noise around whether there will be divestments or FDI coming in is now gone. It's clear that it's status quo. So yeah, from that perspective, valuations are good. Even SBI trades only at about 1.3 over the times. So PSUs will continue to grow, and as and when the consumer stabilizes and private capex stabilizes, that's when we will see an improvement in private banks, I think.
Okay, interesting. We leave it at that. Thank you so much, Chakri, for joining us this morning, giving